What if things go far worse than I anticipate? This is always important. You guys always have to, it's one thing to be like, oh, I'm so bullish on the stock. I think it's going to do so well, blah, blah, blah. You need to run a bear case before you make any investment in any stock, ladies and gentlemen. There's a reason on 1000X I have it so you can do your bull case, your base case, and your bear case all together. Because if you're not running a bear case, then you're not taking into account the risk. So what happens if this company grows way less than I anticipate, right? I had that scenario. So in my bear case for Adobe, the company only grows revenue 6% per year. This would be disastrous. Remember, on a non-GAAP basis, they just grew in this last quarter 13%. So we're talking over 50% decline in growth rate, right? This would be horrible for the company. 6% revenue growth on average, 2026 to 2029. Net income growth of only 8% per year, 2026 to 2029. That would not be good. Now, if they're only growing 6% top line, 8% bottom line on a SaaS-related company, you're going to probably put a 20 to 25 P ratio on the stock, which puts the stock $511 to $639, which gives me a compounded annual growth rate, ladies and gentlemen, of 8% to 14% under a bear case.